What's going on, guys? It's Mickle. In this video, we're talking about the state of the crypto market, state of the stock market, pretty much everything going on in all different markets. If you guys typically come to my channel for XRP content, just know that's not going to change. This is an update on what's going on in the markets. I always say that it's super important to be analyzing all the different markets because it will help you paint a holistic picture of what's generally going on in the US and the world economy. In this video, we're going to be taking a look at what's going on with the Federal Reserve, why we see a bunch of different tech stocks and cryptocurrencies all trading in the same trading ranges, all trading in the same patterns, and how we can profit off this and what we really need to be looking for when this market is going to turn around and turn back to a bullish market. This is something that I've been looking at for the past couple weeks. The market's been bleeding for almost about a year now, and I think we're pretty close to a point in which the market could really turn around and start to push back to a more bullish zone. I'm going to show you guys exactly what I'm looking at right now. So if we take a look at some general tech stocks, and especially high growth ones in the technology sector, we can see that a lot of them are really trading in the same range. If we take a look at a chart of Teladoc, Penn National Gaming, Palantir, Zoom, ARK Innovation, Polkadot, Bitcoin, XRP, we can see pretty much all these charts on the year are pretty much trading downwards or sideways. But then we take a look at the larger market as a whole, the S&P 500, and even if we look at something like Apple, we can see that there is a drastically different chart that we're looking at. All these charts for these high growth technology companies really are trending downward, almost creating the same pattern, while we have a lot of the blue chip, less risky, higher cash flow companies all trading in the opposite direction. This is pretty significant because it tells us that we are in a time that is being dictated by something other than fundamentals. That's why we see all these stocks, these cryptocurrencies, all these high valuation risk on assets all trading in a similar pattern, and we see the more conservative, lower growth, lower yield assets all trading in a similar fashion. And you pretty much have two distinct categories. You either have everything trading in the same exact pattern to the upside, or everything following this kind of ARK Innovation, high growth valuation pattern to the downside. Well, I saw a pretty interesting video by Meet Kevin the other day, and I wanted to play you this clip because I thought this was pretty significant in comparing the high growth innovation stocks to what we're seeing in the crypto market right now.
CPI finally inflects down. Now, call CPI rigged. Call it what you want. It's what everybody's paying attention to. And don't think that cryptocurrencies are your hedge against inflation, because the bottom line is they're not. The beta of cryptocurrencies has very closely started aligning with the NASDAQ, which means cryptocurrencies trade substantially more like tech stocks than they ever have before. Tech stocks are suffering, and so is crypto. And guess what, folks? That means your inflation hedge in crypto is not happening.
So he's saying right here that the beta for tech stocks is very similar to that of crypto. And if we just take a look at some simple charts, we can say that's pretty accurate. We can see most big tech stocks or high growth tech stocks are all down on the year, if not have traded sideways. And we are in a very similar situation with a lot of these cryptocurrencies, especially when you compare them to stuff like Apple and the S&P 500, which are all up pretty dramatically on the year. So the most important thing is to look at now that we understand that high growth tech companies, risk on assets are trading together. Why are they trading so close together? And what is causing them not to trade on fundamentals right now? I think that's the most important part of this video. The most important part to understand is there's a lot of fear in the market about this right here decreasing. These are the Fed's total asset purchases. Right now we can see that the total asset purchases have been drastically climbing right here. This is essentially a sign of how much liquidity there is in the market right now. We know that whenever the Fed is putting a lot of assets on its balance sheet, it's increasing the general liquidity in the market and allows a lot more money to flow into stocks and cryptos in general. We know that the Fed has been recently talking about pulling this number down, essentially vacuuming up a lot of the liquidity out of the market. They're doing this as a response to inflation, and typically inflation is known as a bad thing for high growth, high valuation companies. So essentially where we are right now is people are worried the Fed is going to start pulling money out of, or decreasing its balance sheet, pulling liquidity out of the system because they are reacting to the high inflation numbers we're currently seeing right now. We know that decreasing liquidity would be bad for stocks in general, but we also know that high inflation is not good for a lot of these high valuation companies. The good thing is I have a feeling that a lot of this has been a predictive move by these high growth stocks. And despite the fact that we're still going into a high inflationary period, I think most of these stocks have really overrun this period. Because if we zoom out and take a look at a lot of these companies right here on a 5-year chart, we can see that most of these had dramatic falls from their highs and are likely coming to a point where they're most likely going to get ready to bottom out. We can also take a look at fundamentals to agree with this. This is something that Kevin brought up in this video also, and something that I couldn't have agreed with more. If we take a look at the zone right here, we can see we have a high slope zone right here, low slope, high slope, low slope. The super interesting thing about inflation is it's really just compared to different slopes on this line. So for example, if you were coming right here, so October of 2020, and looked for the next October 2021, we can see that comes right here. So you're comparing a high slope region to a low slope region. This is going to make inflation seem much larger because the CPI number right here is about 261 and right here it's 276. Therefore, you're going to be looking at an inflation rate of around 6 to 7%. Despite this, we know that inflation will start to turn around when, rather than the bottom number being in this flat slope zone, this bottom number is actually in this high slope zone. That is because as inflation slowly starts to taper off, we will start comparing it to a higher slope zone right here, which will automatically make inflation seem a lot less bad than it is. Therefore, once inflation starts tapering to the downside, we will have a lot of relief for the Fed to be able to not have to worry about drastically decreasing its balance sheet. When inflation goes back down, the Fed will be able to be more loose with their balance sheet and allow them to keep adding liquidity to the market. This is something they're going to be incentivized to do because they do not want to have a stock market correction. That is always something they're trying to avoid, but they also need to avoid high inflation. Therefore, they will likely start decreasing the amount of assets on their balance sheet, which could cause a drawdown in stocks. What we don't know is if when they start decreasing this, if it will cause a drawdown in stocks, or that move has already been priced in. I tend to believe there might be a quick drop, a quick scare, but ultimately it will turn around because the market has known for a long time that the Fed plans on doing this. I have a feeling that as soon as the Fed starts actually decreasing its balance sheet, then what we're going to have is we're going to have a lot of stocks really reach their bottom, and the second that starts happening, inflation will likely be at a point where it's going to start decreasing based on year-over-year data. We know right now we're comparing inflation to this flat zone right here to a very steep zone right here, so it's making the inflation numbers look really bad. But once this steep zone right here becomes the bottom number, then we're going to have some more leeway. And say this flattens out a little bit, well, this is going to make inflation look drastically better. Even if inflation keeps going at the same pace, it's still going to be better than comparing it to the zone right here. Once the Fed starts having these numbers roll in, they're going to have a lot more leeway in what they're allowed to have on their balance sheet because they're not going to have to seem so worried about inflation going forward. Therefore, they'll be able to decrease the amount of assets or increase the amount of assets on their balance sheet, and this will help the stock market go back up. Once the Fed doesn't have this worry about decreasing assets on its balance sheet, and once inflation is getting better and moving in the right direction, I have a feeling that a lot of these stocks that have been hammered over the last year, a lot of these high growth stocks that really have excellent fundamentals in the market will have a terrific ability or be in a terrific position to rebound off the levels they're at right now and start trading more on their actual fundamentals rather than just trading in the same range as the market as a whole. The other super interesting scenario this has for us is by the time this starts turning around, as Kevin points out in his video, it's very probable that we're going to be in the May to June time frame frame when we really start see inflation numbers coming down. We know that when that starts happening, it will likely cause a lot of pressure off cryptocurrencies as well off the tech stocks like we were talking about earlier. This would actually not align with the classic 4-year cycle and would put us at a crypto rally in around the mid-summer time. This is also very interesting because I've always been a fan of the idea that crypto is not trading in a 4-year cycle anymore and is likely going to start trading on fundamentals like almost every other market does. It doesn't really make sense to me that the crypto market is just going to go on 4-year cycles for the rest of its existence. I have a feeling that will start to trade a lot more similar to other markets. So I think it's going to be super interesting to watch what happens over the next couple months. My prediction is that we've really seen the worst of the stock market and cryptocurrency market correction. I think a lot of people have been very fearful that the Fed is going to dramatically start removing assets from its balance sheet to try to handle the inflation we're currently seeing. Right now, we're comparing the steepest part of this line right here to a very flat part of the line, and this in the next couple months to right now will probably be the worst inflation data we see. It's very likely that the Wall Street and the hedgies already realize this, and that's why a lot of these high valuation stocks have been selling off pretty heavily. They're probably predicting this move right here, but they also likely know that pretty soon we're going to be comparing to the steeper region right here, and inflation will likely calm down based off of most people's predictions. Therefore, once that starts happening, the Fed will be able to become a lot more lenient with their balance sheet, and a lot more money will flow into the market, and without the inflation fears, this money is going to try to find value in the market. Right now, we know people like Cathie Woods have been constantly saying that these innovation stocks are in deep value territory. If you're even looking at something like Teladoc and just zoom out, we can see Teladoc is trading near peak 2018 levels before the coronavirus even happened. This really doesn't make any sense. When we look at stocks like on a fundamental basis like this, then you're really starting to realize the deals that are appearing in the market. Teladoc is one of the stocks I've been adding to, and for me, it's just a no-brainer. You had such a big catalyst like the coronavirus that is now still going on and still influencing people to come on the Teladoc's platform, yet despite this, it is trading at levels below before where the coronavirus even happened. These are the stocks I'm really trying to find right now. I'm not trying to move into stocks at all-time highs. I think a lot of these innovation stocks, especially in ARK Invest Fund, are trading at steep discounts right now, and it doesn't have anything to do with the fundamentals of the company. It just really has to do with a lot of crazy things happening in the Federal Reserve, happening in inflation right now, but we do know that these times will very likely calm down in the near future. I have a feeling we've seen the worst of this. For now, I'm going to keep averaging into these stocks, keep averaging into these cryptos that are down right now, under the assumption that we are likely going to see a turnaround at the latest this summer. I think right now is where you really want to start averaging into these. You are getting a good deal on most of these stocks. It's not like buying them all the way back up here in a small correction. We are at 65% corrections on most of these. This is what I'm watching right now. It'll be interesting how it plays out. If you guys enjoy this type of update on the stock market, general markets, just everything happening right now, make sure you let me know in the comments below. I'm going to try to do an update like this every week or two just to keep you guys informed on what's going on. I know it's a lot less interesting than the typical XRP videos, but it's super important to understand this, and I know a lot of my viewers are probably interested in other markets as well. I got my foundation in investing really in the traditional stock market, and while I do focus a lot on crypto right now, stocks are still an important part of my portfolio. I'd like to talk more about them on the channel going forward. It's not going to replace any XRP or crypto content. It's just going to complement it, and they're going to be just kind of rants like this, just talking about what's happening, just to give you guys a general idea for those who care. Thank you guys so much for watching. If you made it all the way till this point right now, you need to like and subscribe. You've already done so much to help me. Just help me a little bit more. Thank you so much for watching, and for now, Mickle out.